Good afternoon to everyone. Good evening if it might be nighttime when you watch. But you are watching Financial Matters. Why? Because financials matter. This is sponsored by Clear Faith Christian Ministries, where we talk about what people don't mostly talk about in the church, which is finances. And so we decided as a ministry that we would create this broadcast and this podcast to bring on financial people, bring on people from the marketplace to talk about what they do so that we, as the church, individually or as an entity, can do better to serve our communities. And so we are in week two of our session with Miss Catherine Agada. And so she is in the green room right now. And so we're going to bring her in shortly. But we just want to let you know that tonight we will be in our Bible study at 8:30 Central Time. So if you're not busy, come on in. We'll be on YouTube as well as TikTok. And for those of you who watch me, we worked out all the kinks in TikTok, so hopefully we won't have any problems tonight like we did last night. Please come through. We are continuing lesson 19, chapter 19 in the book Knowing God by J.I. Packer, and what we are talking about in this segment is being sons and daughters of God, what that means. And so you don't want to miss it. And if you have missed it up to this point, go to our YouTube channel that you're on, subscribe, and you will have access to all of our videos, which are over 500 videos that I've done on Bible study and commentary. So become a member. It's free. We don't do Patreon or none of that other stuff. We treat it like the church. We raise an offering at the end of the class. So do your best if you can to be with us on tonight. And please subscribe to the channel so that you don't miss, and hit the notification bell so you do not miss any time we go live on Tuesdays or Wednesday afternoons or Wednesday evenings. All right. So let me bring on Miss Catherine Agada. Hold on. All right, ma'am. How are you?
Oh, I'm doing wonderful. Thank God. Under the weather, but God is helping us.
I was going to say you still got that sinus stuff going on. But that's all right. That's all right. Sometimes he needs to slow us down for what we got to speed up for.
That's right.
So
That's
you,
right.
you don't know what's on the docket till you get on it. So we are glad that you are here. Um, and so we're going to get right on into it. Uh, just give us a real brief snippet on who you are in case we have some new people watching. And then today we're going to be talking about the nuts and bolts of financial planning. All right. So who are you?
Thank you, Bishop Miller. My name is Catherine Agada. I'm a financial professional and I do financial literacy education to our community. And the reason that I do that is that I want people to stop guessing and start planning for a realistic financial future. Many people rely on luck to build their future. But failure to plan is planning to fail. So it is our responsibility and the mission to leave no family behind by educating them on what is essential to build a financial future and leave a legacy according to the scripture that says we ought it a good parents leave an inheritance. Even if it's not for your generation, at least you owe it to yourself to use the knowledge, the abilities, and the gift that God has given us to plan, to sow, so that you can reap. So today, and as always, I will be discussing things that can help our listeners know how to build their financial future and what to look out.
All right. The floor is yours. Take it away.
Okay, so thank you. I know I did the general introduction last week on financial resilience, but I started by saying to build a foundation, financial foundation starts from protection. Many people start from investment.
Mm.
But that is like building on a shallow sand, because you can have all the investment you want. Without protection, your investment will collapse. You need to protect that which is building the investment. So, can you imagine the greatest asset that we have is your life, yourself. You are your
Mm.
greatest asset beyond your real estate. Because if anything happens to you, but your real estate and everything else does not exist. So,
Right.
we educate people about the importance of life protection. Get a life insurance protection that, one, you will be able to sleep knowing that you left something behind for your child college, for the mortgage, the apartment they're going to stay when you are gone, for
Mm.
everything that is decent that you receive from your parents or you may not have. Many people have come to me and said, Miss Kathy, my parents didn't leave anything for me. I suffered, I struggled, but I don't want my children to do the same, to suffer the
Mm.
same. So if you want to break that chain, that brokenness, poverty, it starts by the foundation of protection. Protect yourself so you can leave a legacy. That's one.
Mm.
You also want to protect yourself because your body is the temple of God, and when it becomes sick, you will not be able to perform in the physical realm.
Mhm.
When you get any of the critical illness, chronic illness, terminal illness, if your job pays you up to 6 months, they'll let you go. Somebody got to do the job. And once that happened, what happened? Everything you've worked for begins to go down because your savings will go down. Mortgage still need to be paid, apartments, the car loan. And that's why we see people losing everything they have, again, because of no protection. But with life insurance protection, you are not only protecting for your beneficiaries' benefit, you're also protecting your health, because life insurance comes with living benefit. So that when any of these diseases happen, you show that you can tap into your life insurance to receive all the care that you need. And so that's why protection becomes the foundation. Also, with protection, you also want to work hard and make sure that that which you are leaving behind, whether it's $5,000 or $100,000, you want to make sure it goes straight to the people that needs it, which is your family. You do not want the system, the government, the IRS, the court system to go and stop it and then have to send them to go fund me. That
Right.
is where, again, protection matters. You
Mhm.
you build financial future to protect your family, to protect yourself, and to protect your legacy.
Right. Right. So let me ask you a question right here. Um, in time past, and we had discussed this when we were on our meeting earlier this week. In times past, you had made a statement that said life insurance was always tied to death. That you get life insurance now to take care of yourself when you die. But times have changed, and you're saying now that it can actually you can utilize it for now. But does that take away from preparing for your burial and all of that?
No, it does not.
Okay.
Life insurance has become a dual instrument of wealth creation as well as legacy protection, or call
Okay.
it legacy building and legacy
Right.
protection. Why? Is that with the new life insurance that is not term, you can put in your money. The way it works, the insurance company takes a bit of it to ensure you, to guarantee you that at death, your family is going to receive certain amounts of the face value. And whatever that remains on the premium you're putting, they start growing it for you as a savings. So now, as your savings grows in the in S&P market, you are growing your cash value, and you have every right to go in there and take money that they have, and they are growing for you.
Right.
So life insurance is no longer term or death sentence. It is now a living sentence. And because of the fact that they also knew that there is no point that one will die of critical illness element when he has some money stashed away for that. So they rather give you a portion of that money when you are still alive to take care of yourself than wait until you're dead. So now you see many people beating cancer, beating heart attack, because the money is now there to get the best care you want. And these are money that has nothing to do with the health insurance. These are money for you to focus on yourself, on getting the best treatment, on paying your mortgages or your bills. And so life insurance now has become a dual portfolio that can allow you to save, to build, and to protect. And that's why the financial education is needed in our community.
Okay.
So continuing after protection, then we build on debt reduction. You have protected yourself, but if you cannot manage your debt, you're probably not able to continue the payments of protection, because you have an option with life insurance to pay annually or monthly. So if you pay monthly and something happened to your income or something happened to you and you decide to cut off your life insurance because it's not important, that is where the mistake is. So we teach you how to work on your debt. Bishop Miller, there are many people that they could have been, the money they're spending on coffee, on hangouts, on toys, could get them a sizable life insurance benefit that they can grow a fortune from. So we show you where you can reduce, how you can reduce money here and there so you can apply it to your protection. So that's debt management. Then the one that is important is saving. Many people are not able to save money. And why so? You cannot save what you don't have, right?
Right.
The reason they cannot save money is because the income coming in is slow, is small. For some people, it's because they don't have enough income coming in. For some people, the income comes in, but it is spending habits.
Yeah.
So we can look at your profile and tell you where you can stop on spending habit. But when the money coming in is not enough, we recommend extra income opportunity, residual income. It doesn't have to be 2 jobs. There are many things right now out here that one could do to be getting extra income coming in, even if it is for a time, but you need to bring in extra income into your portfolio in order to be able to fund your life insurance, because without it, you will go from broke to broke and broke, never able to save up money for retirement. And we have also some solutions, some ideas, some tips that I can help my clients on how to make an extra income. The opportunities are there.
Okay.
And then after the saving, now we can talk about more ways to grow your portfolio, to diversify. Now, if you want to go into the market, maybe you want 40% of whatever that is left after you paid your tithes and income.
Right.
You can decide to take up to 40% of your portfolio and then put it in the market, put it in rods, put it anywhere to start growing, put it in business, invest in other people's business. But you cannot be by yourself to get your financial freedom. You have to be out there to know how and what to put in. Now, many people that I've worked with, there are 2 buckets that when I speak to my clients, I said, okay, even if you haven't gotten to that step where you start investing the extra level.
Right.
When you start with the foundational life insurance, you are still saving money, because you can take the money out of your life insurance and still go put it out there in investment. But right now, why do you want to do that when life insurance offers you complete tax-free? Many people don't know, especially businesses. I speak to my business clients. Do you know that if you open up a sizable life insurance that is that's your max funding, or you're putting in enough income, you could go in there and take that money completely tax free.
Mm.
So those are the foundations. I just wanted
Okay.
to talk
Yep.
about that foundation of building protection,
Right.
debt management, savings, and investing.
Got it. Got it. So for the average person, basic two parent household, two kids. Let's just keep it basic. Is it important? How should you tier the life insurance? If you have a baby versus a teenager, or they're both kind of stair step kids, and you got your parents. The father works, the mother works. I'm just saying a typical house. Should you tier? Should first of all, should all of them have life insurance? And number two, should you tier it, meaning the babies, the children can have a small amount, the parents according to their age, and then the kids mature. As they mature, the money grows, as far as much as amount of coverage. I'm tongue tied today. Amount of coverage. So how would that look to an average family where it doesn't break the bank? That's where I'm going.
That is a very good question. The way it works is depending on their objective.
Okay.
Many people build or save based on what is more important.
Mm-hmm.
We have life protection, which is income replacement.
Mm-hmm.
So some people, what is most important to them is, if anything happened to me today, will I be able to continue to pay my bills,
Okay.
afford my dwelling place, afford my car notes, and things like that?
Right.
So with such a person, the breadwinner must insure themselves,
Mm-hmm.
because that life insurance on the breadwinner at least will make sure that even when he is sick, that their family is not affected, their family financials are not affected.
Right.
Then if they if the objective is for legacy building, which means I don't want my children to suffer when I'm gone,
Right.
then we say you put it on yourself. Also, putting on if it's a one income family,
Okay.
you put it on the head of household
Yep.
at the basic, because the truth of the matter is that everybody in the house needs a life insurance, and I'll tell you why, how it will benefit all of them if they all have insurance on themselves.
Right.
Okay, so but in this case, we are still looking at a place whereby to make ends meet. The most important one again, um the father needs to, or the breadwinner needs to have protection for legacy building.
Right.
Then if you want to increase your family finances, the objective is growth,
Mm-hmm.
investment, then you want to max fund it. And you can mass fund it on anybody in the house. You can
Okay.
mass fund it on your wife. You can put on your wife, on your children, on yourself, because everybody's policy is growing, and eventually you're going to be cashing in from here, cashing in from here, cashing in from
Mm-hmm.
here. Okay. Now,
Mm-hmm.
if you also need a relief if anything happens to your children or to your wife, because when something happens to you, your wife and your children will be okay. But what about if something happens to them before you?
Right.
Are you prepared? And that's why you put in insurance on them too,
Okay.
so that you two will be, whereby two incomes are coming in, and you
Mm-hmm.
have a protection on each other. Um, if anything happens to any, or at least the other person is fine, so that it will not no longer be, if something happened to you, I'm okay, but if something happens to me, you're starting all over. Do you understand?
Right.
And there's also something that they call joint joint insurance. You can also have joint
Mhm.
with your wife. And then the last objective, are you doing it for your children to grow their money, to
Mhm.
grow, save money for them for either college or eventually retire? Then you put on the kids. Because when you start, at any age, you start savings for your kids, even if it's $30 a day, a month, we call it burger. The cost of burger for the month, even if it's $30 a month that you put on a kid, it will start trickling in, trickling in, trickling in on compound interest. By the
Mhm.
time the child is ready for college, he would have had enough to buy his first car.
Right. Right.
If you leave it there, and when he's 18 or more, he can take it over and he's still paying at a lower rate, because at that time he's not paying at the current rate, he's paying at when he was small.
Mhm.
And if you continue to pay it, by the time the child is ready to retire, if I is retiring as a millionaire, that's what we call the $1 million babies.
Mm.
And that's
Okay.
how the wealthy are able to transfer millions to their children before
Wow.
they work. They didn't
Right.
need to invest anything, they just put it in their life insurance.
Yeah. Yeah. Okay. Wow. So when you get a family, one of the things I heard you say is you do an assessment.
Yes.
Okay. So what does that assessment look like?
Okay. The assessment, we're going to look at your financial need analysis
Mm-hmm.
to see in aspect what will be able to sustain you till retirement, because we are looking at life insurance as long time goals,
Right.
right?
Right.
So it might as well plan for um when you're ready to retire at 65.
Mhm.
So we're looking at what are your responsibilities, your bills, your mortgage, your children's college fees, and everything. And when we put it together, we'll now say, the system will say, this is how much of insurance you have. However, when we put the amount of insurance based on you're retiring comfortably and it becomes high for you, you have the option to bring it down. So you bring it down to whatever amount that you can comfortably maintain in your portfolio. So we have bare minimum of 50,000 of life insurance face value, not the premium amount.
Right.
Premium is the money you contribute to keep. Then we have 100,000, 200,000, 500,000, 1 million, 2 million. Now, what is the difference? The difference is that I will explain to my clients based on their objective or needs. First of all, I ask, what are you hoping to achieve? If you come to me and you said, I want to grow money very fast, I would like to have a lump sum money that I'm going to need to invest in something. I'm going to do an illustration for you,
Mm-hmm.
and I will ask you to max fund whatever that at
Yeah.
that point you can afford to put in. Then your money is going to grow fast. But come to me and you say you have little money to spare, but you still need
Mm-hmm.
your protection. So I said,
Right.
okay, if that's the case, let's go for solving for basic protection. So
Yeah.
I can give you, based on what you can afford to put out a monthly, something to still give you that protection that you need
Mm-hmm.
without you being totally unprotected because you can afford it. So, and that is why I love what I do now, especially with index universal life insurance. It's not one size fit all. It's not like term life that when you finish paying it and you didn't die, you lose your money. It's not like whole life, which is expensive. Whole life is more expensive. But when I want to help you to grow or to protect, and I put you on Index Universal Life, you choose how much you can afford, which is your premium. You choose how much you want to be covered. Do you want to be covered for 50,000, 100,000, 1 million? So everybody can do it.
Okay. All right. And for those who work for companies that provide life insurance, what would be your advice to them? Because they may think, hey, I don't need this because I got my company has life insurance and I paid into that. is that wise, or is it, because sometimes they offer it in the benefits, and we see dental, we see health insurance, and we think that's enough. And so when they put the life insurance on there, we're just like, oh well, it's just like anything else, but it's not, because you don't have control.
Thank you. Again, I say to the people who say they have life insurance at their job, no, you don't have life insurance. These are the reasons why I say you don't have. First of all, for most companies, apart from a few, if you do not die at the job, you don't get anything.
Right.
When you leave the company, when you get fired, when you quit, you are not walking away with your life insurance. So at that point, you didn't. I worked for 20 years and I just retired myself last year in November. I walked away with nothing. The life insurance I had with my company, I didn't take it with me. There, right now, I had to self-insure myself. So when you are thinking you have a life coverage with with your job, unless you know that something is going to happen to you while you are working there, nobody
Right.
knows when you're going to leave the job.
Right.
So
Right.
most of the time, no, you must insure yourself outside and other than your job, because that is just a benefit they give to us because it
Yeah.
gives them tax credits anyway.
Okay. 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 So when if I were to come to you and say, hey, Catherine, I want you to look at my finances, what would a person have to bring to get started for you to do the analysis?
Oh, I want to know for life insurance, actually, what is most important is medical.
Okay.
They look at your medical history because it's not everybody that's qualified to get life insurance. And that is why it's good to start early to get your life insurance. Because the
Mhm.
biggest mistake the younger folks do, the younger folks, they reject life insurance because they are okay and they're healthy. But when they get older and get sick, life insurance reject them.
Mhm.
Did you get that? We
Yeah.
reject life insurance when we are young and healthy, but life insurance rejects us when we are
Right.
sick and older. So you want to start when you're still young and healthy
Mhm.
to get into it. So I will ask about their medical history and record to see if they
Mhm.
will qualify. I will ask about their lifestyle record, record. Believe it or not, life insurance is an agreement that hold me accountable, that I am going to pay out to you 1 million if anything happened to you from the day this contract is signed, either to you or to your family. So they have the highest risk they are taking on us.
Mhm.
Therefore, they want to make sure they're not just taking it on anybody. So
Right.
if you have your license revoked, they will have to consider that you may or may not get life insurance.
Mm.
But I always tell my client point, there's no harm in trying because you
Right.
don't bring money to see if you qualify. So if you put in an application, if you get denied, you have nothing to lose. At least you know the areas that you have to work on,
To work
and
on. Yeah.
there's no money out of your pocket. If you
Right.
get approved, then you can come up with the funding to keep it alive. So they look at your lifestyle, driver's license and everything, medical history. And when it comes to finances, it is more on you. What can you afford? Because they really don't care on the financial. It's when you want to do annuity, which we're going to talk
Mhm.
about income for life, especially for the older folks that are in retirement. It is very,
Mhm.
very critical that people right now that we're still leveled up in taxes and to start planning about bridging the income gap for retirement.
Okay.
So back to what they need. All I need to know is how much can you afford, and how much you can afford is based on what you're coming into your income that you have and your responsibility. So at the end
Okay.
of the day, we can come in in between and say, well, because you need a life insurance of 500,000, but you are only making social amounts, let's bring it down to 250. Is half is
Yeah.
better than full.
Right. Right.
Nothing rather.
Okay. And as far as age range, we had discussed last time that we try to do a financial piece to premarital counseling. And we also talk about it as far as family planning for kids and things like that. Financial matters are not just about money, it's about the price tag to live. And so, Spectrum has a commercial out saying, we didn't realize that when we want to have a kids, that kids are expensive, you know. And I was like, duh, you were expensive. But anyway, uh, you know, a lot of we were brought up to kind of plan and save. We kind of saw our parents do a little bit of it. Um, but like you said, life insurance is always tied to death. But in this generation, where they can see the benefits of having life insurance as an investment tool, excuse me, what's the sweet spot age to get insurance? And I'm saying beyond 18, and where you're not under your parents, and you're out there saying, okay, I'm making a little money, I got a nice job, I got a lot of expendable income, you know. Um, Again, talking about the foundation building, most kids will look at investments. They'll look at crypto, they'll look at Bitcoin and all of that kind of stuff. But that's kind of like third tier from what I'm hearing you say, because if you don't take care of your life, Bitcoin and crypto don't matter. So what's the sweet age or the sweet spot for a kid to be or for a young adult, male, female, to be considering life insurance and where their money is going and how it's going?
Again, thank you. The best time to get life insurance is today. So no
Okay.
matter what age you are, no
Right.
matter the range of 1 year old, 18-year old, 20, 40, is today. Why? Because nobody knows tomorrow.
Right.
That's for sure.
Yeah.
Secondly, you want to get it when it is still cheaper for you.
Okay.
You may not die, but something might happen, an accident might occur, and you're no longer insurable. So
Right.
you get it when you know you are still insurable. You
Mm-hmm.
may get into a drunken situation whereby your license is revoked. You're no longer eligible for life insurance.
Wow.
So today is the best day to get protected. And remember, if you start early, you are not wasting that money thinking that when you die,
Mm-hmm.
you are just keeping yourself in running for you, which you eventually can go in and tap into that money because it's your money.
Right.
You can take it out. You can
Yeah.
take out a loan from your life insurance. Who will
Mm.
believe that you can actually go in and take out a loan for your life insurance?
Right. Now, now that throws me another question. I've talked to other insurance agents, and they don't tell you that part. They're so busy trying to sell the product and how much coverage you have, but they really, the ones that I've come across, really don't get into the ability to use it as a living benefit, number one. And what has recently I've seen is they'll talk about life insurance, but then they'll talk about final expenses, and I'm like, I got caught in that. It was just like, oh, okay, yeah, I do need that. Not thinking that I already was shopping around for life insurance and it's all inclusive. You don't need two separate deals, but that's how they're promoting it. It's like they're not tying it to life insurance. It's almost like a separate, and it can be, I know that part, but
Yeah,
it's being advertised as not a both and, but a either or. And so talk a little bit about what the difference is.
sure. Bishop Miller, I can sell you final expense. I can sell you term life. I can sell you whole life. But I choose to sell you the one shop, one that you can get everything.
Yeah, one stop
It's
shop. Yeah.
one stop shop, which is the new life insurance. And the
Okay.
reason is because it's not all, we're all licensed to sell life insurance, but it's
Right.
not every insurance brokerage or agent sells the advanced market, which is IUL and annuity.
Okay.
So most people stop at term life and whole life.
Mm-hmm.
Probably they don't fully understand IUL, or they don't want to get into it because of some technicalities of investing somebody's money and then the money is not growing as the person expects. And I've had many stories, all right?
Mm-hmm. Mm-hmm.
However, the reason that some don't again is because either they didn't have the leverage to sell it in their agency,
Mm-hmm.
or they just prefer to focus on something. Like I said, I can do all life insurance, but I'm focusing on IUL and annuity. So when you
Mm-hmm.
hear me talk about IUL, you think if you come to me for term life that I'm not going to sell it. I will sell you life term, but I'm selling to you what I know that you get all that. You get
Mm-hmm.
121-year uh, protection instead of 65 with term life.
Mm-hmm.
You get your money back if you die. Everything is, if you retire, everything will be returned to you. They'll start
Mm.
paying back accelerated
Okay.
benefit. You will get protection from mortgage because if you die, they give lump sum. So mortgage is protected. Why sell mortgage insurance when you could get it in one place?
Right.
You will get hospital, healthcare. I mean, it's no brainer. But
Mm-hmm.
yes, some people don't have the they don't have full knowledge, or they just want to concentrate on some just
Sure.
one.
Okay. So with the all-inclusive part that you're talking about, it not only looks at your life insurance, but it has also built in, and tell me when I'm wrong, it has built in the final expenses so that it's all encompassing, or is it still, I got my life insurance, and then when I get to this certain age, I got to talk about final expenses?
No, you don't need final expenses if you have a full blown life insurance. Why? The reason they get final expensive um is because they want something cheaper, right? But I
Right.
can almost tell you that final expense is not cheap if you consider
Mm.
IUL. It's not.
Okay.
But you don't need a separate final expense. Why? Because the minute that you tender in the claims that one is dead,
Mm-hmm.
the entire 1,500,000, whatever it is given to your family to take care of you.
Mm. Okay.
And some of the companies that I represent, like Transamerica, they built in concierge services for final expense that you will get immediately while you are waiting for the main check to arrive.
Okay.
And that is
Okay.
free.
Right. So it's kind of get by money,
Yes,
like
get by money,
we
which
used.
is the final expense money, like 25,000. Yeah, get by
Right,
money.
right,
Let's use it immediately and go get the cab, and they will do it for you. They will go and make sure that everything is planned out for while they are waiting for the main check to come. Yeah.
right, right. Okay. So, would you recommend, as I've seen a lot of funeral homes, go to pre uh pre planning for final expenses so that it can be incorporated into your life insurance, or what kind of what you're going to spend, so you kind of know what you need to get as far as life insurance is concerned?
Can you repeat that question?
If I, let's say, I am looking at getting insurance, I know I'm going to have final expenses. Would it be wise to get the quote, estimated quote, and pay on it, like most of people are trying to do now, so you don't have to do the all of a sudden GoFundMe and all that? If you pre-plan with a reputable funeral home, then they'll give you, posted prices and you're locked in, and then you don't have to worry about it when you get to that time. Is that kind of the way in which you can really plan for your life insurance because you already know that cost?
Exactly.
Okay.
Exactly. Yes, with IUL, I have a client that came to me and said he wants to get insurance for the parents and for the parents-in-law, right? So he
Okay.
wants, so he said I should quote him on final expense. So I did final expense for 25,000. And then he asked me to quote life insurance. I quote life insurance. The difference was much. Life insurance was way cheaper
Right.
than final expense. So
Wow.
he now had to get them life insurance because
Right.
when something happened, they are getting more money because life
Right.
insurance will give you at least 50,000 and not
Right.
25,000. And they are
Okay.
paying lower.
Yeah.
And life insurance can also take care of them, not just in death, it's to take care of them in sickness.
Right.
Yeah. So
Right.
final insurance is there to elevate the burden of final expenses.
Mm-hmm.
But if you built it in also in your insurance, it will also work.
Right.
So
Right.
so instead of not having a life insurance, you can take that money and just put it in life insurance. But if you want to
Mm-hmm.
have both, you can have both, but it's the same and same
Right.
pence.
Right. Yeah, because like I said, I mean, I hear a lot. I keep my ear to what's going on, and when I look at different social media advertising about insurance and all of that, it's almost, if I'm getting confused, I can imagine what the average person is going through, which is why we do this, is so that you don't get confused and you understand the importance of it, but it doesn't have to break the bank.
That's right.
So and I get kind of leery of the commercials that say, oh, for 29.95 a month you get $1 million plan, and I'd be like, that don't even make sense to me. So what does it, what does it, my question is, what is the base price for good coverage? So I'll give you an example. When my dad was getting transition, he had everything covered. Everything was paid for. His crib, the funeral home, the all that. But he also had money for his wife, a little bit for me, a little bit for my sister. So he had everything covered. He knew what suit he wanted to wear, down to who was driving and all this kind of stuff. And I tell young people, much like what you had said, that life insurance is not about death, it's about living in preparation so that you don't get surprised. So my question is, had contracted, he was diagnosed with cancer. So he was given 6 months, but he lived 13 by God's grace,
Amen.
and he didn't have to worry about no money. It was like he had everything was paid for, the house was taken care of, there was no worry. And in today's society, you see a lot of younger parents, especially if they're on them streets, their kids are dying before they do, and they don't even think about having any bare minimum coverage just to cover certain things. It still would be under life insurance. They look at it as, oh, I should have got final expenses, that kind of thing. And
Mm-mm.
so it's a language, the
Yes, yes,
language.
yes, yes, yes.
Um, so for a single mom, let's look at it from there. From a single mom that got boys that are out in the street, what should they be thinking about as far as coverage for their boys? What would be a minimum, so that not looking at it as an investment, knowing that there's a danger. I'm talking to our community. They run in the streets, they're living a wild lifestyle, coming in and out of the house, not jobs, not all that stable, but the mother or the father, or the mother and the father, are concerned that if something ever happens, it's going to come out of our pocket, not be prepared for it. So how would a family in that scenario look at life insurance?
Okay. Great, because I have a scenario like that recently. Actually, two of my clients, they came to me because they are worried about that anything could happen to their boys because of streets and because of what is going on right now. You never know.
Right,
Somebody could pull up a gun anytime and shoot
right,
you. So they wanted to know coverage. Um, so as far as the financial part of it, again, it all depends on how much you have. Where do you want us to start? Because it's like I can give you what you can afford. That does not necessarily mean what you what you fully need.
right.
Because
Okay.
if you want to put a protection on your child, knowing fully well you put up 1 million, 2 million on the child, right? If
Mm-hmm.
anything is to happen, you are $2 million richer.
Right, right.
But if you cannot afford the premium for 2 million and you can afford a premium for 100,000, then let's do what you can afford. Because we don't
Right.
want to put you on insurance protection and you go cancel it because you have to pay your light bill. It doesn't make
Yeah.
sense.
Yeah.
So we want to. So there's something that you said that I wanted to touch on.
Mm-hmm.
Oh, we give you life insurance for 1 million for $19.99. That is because they are selling term life. Um,
Okay.
Term life means that you are only guaranteed protection if you suddenly die.
Mm.
If you are sick, you're on your own.
Mm.
If you don't make the payment, they take it away and they will not give you the one back. If you don't die, you're on your own, they will take the money and keep it. So term
Mm.
life is a temporary insurance for a specific period, hoping
Right.
that there will be accidental death. And then, because many people don't claim term life, they outlive 65 years or they don't die. So the insurance company have more money to bring down the cost of term life. Because at the
Mm.
end of the day, they're keeping all those money. Many
Right.
people outlive 65.
Right.
There is no there is no cash accumulation like the other insurance where you can go
Mm.
and take your money. There is no um the extra benefit. But most importantly, they're betting on will you die in 10 years? Will you die in 12
Right.
in 20 years? Will you
Right.
die in 30? So if you want to bet for your life, it's fine. But for somebody who is just starting and they have some years on their side, if they don't have the
Mm.
money to do the traditional life insurance, IUL or whole life, they can start with term. And maybe before they get to their final, let's say if it's a 30-year term or 20-year, before they
Mm.
get to that age, they will think about converting it to permanent. The only thing is it gets more expensive at that time. And if
Right.
you yes, but you have the option to convert it, but it gets more expensive. And that's why I said people, if you need a 20-year term and you are paying $20 a month, let me try and get you an IUL where you will get at least 30 years and still
Mm.
get more benefits, including living benefit. So it's just because people are used to term. Yes. And that's
Right.
why we are in a mission to let them know that there is another alternative bucket that you can put in your money to be able to take advantage of everything that is out there portfolio
Mm.
wise, growth, protection, tax free, uh, um, planning, and the rest, retirement, as well as lawsuit protection.
Okay. Okay. And then finally, before we wrap up for today, I went a little long because we were a little late, so it's my show.
Mhm.
When you look at illness and you look at health insurance and the cost of, which is constantly rising, and we're living longer, um, how does that scenario play into the purchase of life insurance and health insurance? because we had talked before. We know Social Security is not going to be there. We know Medicare, Medicaid is going to be going crazy. It's already crazy. It's going to only get crazier. I think they'll have every letter of the alphabet by the time they get done. You have Part B, Part C, Part J. I mean, it's like, how many parts you going to give me? So and it's confusing. I mean, I don't have it. I'm not at the age to have it, but it's very confusing that the government pays for your health insurance, but you have options and all of that. So what is how do you approach sickness and illness as it relates to health insurance? Because sometimes it's not until they get sick that they think about life and health insurance.
Exactly.
You know.
Okay. It's a very good question because most people don't understand the difference between life insurance benefits and health insurance. Health insurance, the traditional health insurance that we know, is quite different. Like it's a hospital insurance. Visit your doctor, take care of your operations and things like that.
Right.
And then where life insurance kicks in is when we're now talking about long-term care.
Okay.
We are Medicaid. Government
Mm-hmm.
comes in to take care of you when you are growing older, to determine if you're going to stay in a nursing home, in a private home, to determine if you're going to get all the care that you need
Mm-hmm.
to retire peacefully and take care of your health.
Right.
So when it comes to health, the reason that life insurance is the best bucket to use to plan against health catastrophe, especially with critical and chronic illness is that one, when you have your regular life insurance, you have your co-payments, you have your everything, your deductibles and everything, right? When you go and you have a critical illness situation, and after a while, the insurance payment cut off, and you are now heavily burdened with the rest. You have to pay the doctors and fees. Have you seen people who have millions in bills, hospital bill? Not because they didn't have insurance, but insurance did their best, and the rest you're on your own.
Right.
At that point, what are you going to do? You cannot even go and continue the treatment because you don't have money to pay for the ones, talk less of new one. But that's where life insurance kicks in. Life
Mm.
insurance gives you the money so you can go and get the best treatment because
Okay.
it's your money.
Right.
You don't need to negotiate with hospitals. I mean, you go to the best cancer-free facility because you have your cash. They give you that check. It's your cash. You can
Mm-hmm.
afford to go and give them 50,000 for an operation that your health coverage. Do you understand? So people need life insurance for the extra coverage where their health insurance stop. They can use it. With
Got
your
it.
life insurance, you're not going to use it because you are having headache or you are having
Right.
appendicitis. No, they're not health insurance. But if
Right.
you are having failure, heart failure, dialysis, things like that are critical,
Mm-hmm.
or you're not able to do two of your daily living activity, you cannot eat yourself, but that your life insurance stands beside you to give you all the money you need to be paying
Mm-hmm.
your bills, to be paying your expenses, to be so, yeah. So, and then the final one is for retirees.
Mm.
My God, there is something that is called a step down. Bishop Miller, for many people that are about to retire, thinking that their social security or their Medicare benefit will help them, they will be in for a shock when the time
Mm.
comes. Why?
Right.
Because Social Security will not pay you enough to even begin to think about your health. And Medicare is now going to scrutinize you to see if you're qualified for that help that government is supposed to give you. If
Right.
you made certain amount of income in your lifetime, they are going to put it into effect to see if you are below poverty level. If
Right.
you are above what they call poverty level, they're not going to pay you. They're not going to take care of you.
Mm.
And you find that you're going to have to take up your expenses by yourself. Have you ever seen people who retired and they go back to work?
Right.
That's
Right.
because Social Security failed them, Medicare failed them, and they had to go back and to start working just to
Hmm.
make ends meet. The subject of step down is going to be for another day. It is step down that makes people write away their mortgage to the government, because the last thing they will tell you is that, well, if you cannot do this, if you cannot sell this home, we know you are living in this house, but if you can sign the paper that when you die, the government can come in and have the mortgage, then we will take care of you. That
Right.
is how step down works. Step down, they want
Hmm.
to strip you of everything you have until you become totally poor. You know,
Right.
so
Yeah.
why will people subject themselves into all this, knowing fully well there is an alternative to plan to secure your
Right.
health, your future,
Right.
your children, your money, your everything, all in one
Mhm.
foundational protection?
Yeah. Okay. All right. Well, man, we covered a lot tonight. But I'm looking at the comments, and a lot of folks are saying good topic and advice. So that's good. We know we're hitting where people are, and that's definitely what I want to try to do. So next week, what I'd like to do is really get into retirement. We kind of touched on it at the end, but that was a good segue to next week, where we can spend some real time on what is retirement, how to look at retirement. I had a client who was he had just got married, had a little child, worked for the pharmaceutical sales, made good money. And he said, I want to retire by 40. And I was like, so then what are you going to do for the next 30 years? And he's like, what do you mean? I said, we're given spiritually three score and 10. That's 70 years. You retire at 40. Do you have enough money put away to last you for 30 years? Did you take into account? Because he had investments and he had this and he had that. I said, did you sit down with anybody to kind of project, what was going to happen in 30 years? You don't know what's going to happen in 30 years. And the way he was living was because he made good money, but he was so concerned about retirement that he wasn't living. He was like, I want to make sure I got this in stock, and I want to make sure this, and I want to make sure my family is taken care of. I said, dude, you got time. If you plan it out right, you got time. You don't have to be thinking at retirement at 35. And so for those type of young people that we have out there that are making, these content creators and influencers making all this good money, and you see it on TikTok and Instagram, they just blowing it away, and then when
Yes,
TikTok go away and when Instagram go away, what you gonna do?
that's right.
So I really want to talk about what a person should really be thinking about when they're thinking about retiring. And how do you plan now for that? If you have the income and means, one, but also if you don't. I mean, if you're just you know Johnny Joe cleaner at the store, you're not going to do that for the rest of your life either. So it's like, what how do you plan for the future is what we want to cover tomorrow, I mean
I
next
love
week.
I love that because I that's also what I wanted to talk about next week,
Yep.
retirement.
Yep. We're
So
there. We're there.
yeah,
That's why
that's
we
what I
take.
want to
That's
talk
why
about.
we take the
But
time, so that we don't have to cram everything in. That people
exactly. But
can
I can
really
tell you
absorb.
though, I can tell you that you're on point. If he planned it out well, he could retire whenever he wants to retire. But you're not going to based on what you are currently seeing in your pocket. No, that's not going to cut it. You have to
Right.
plan it ahead, and there are tools
Right.
to plan ahead. But another thing is that retirement means different thing for some people.
Yes.
I actually am retired, but I'm still working. I retired my job. So
Sure.
retirement for some people means I don't want to work for anybody anymore. It
Mm-hmm.
means I don't want to continue to do this. I want to just be in my house, open up my laptop, and money is coming in here and there. That's
Right.
retirement. So
Right.
we're going to talk
Yeah.
about that next week.
Yeah. Because retirement is really just having control of your own life.
Exactly.
It's not really about money as much as it is freedom.
Exactly.
But
That's it.
freedom ain't free.
That's
And
correct.
so we definitely got to talk about how to do it
Yep,
in a righteous way, in a thoughtful way, because what was going on with him was he was worried. He was always worried, and I'm like, don't worry. If you put it in places that you got somebody to help you, don't have to worry about it. Let
exactly.
somebody work with you. So
Exactly.
that's my concern on that one, because his wife his wife didn't work because he wanted her to take care of the baby, which was fine. But then it was like when she would ask for money, he'd be like, well, I'm saving for this and I'm saving for that. It was always in the forefront, as opposed to
Yeah,
saying, I got this bucket, I got this bucket. I can take a little bit from this bucket. I know I'm going to have to
exactly.
put it back, that
And
kind of
we
thing.
can never save our way to retirement. No, you can
Right,
never save your way to the retirement.
right,
It has to
exactly.
be
So,
planned.
yep. So I want to,
Yeah.
unpack all of that and give the people the information that they need. So
Okay.
again, thank you, Catherine. We appreciate you. The knowledge that you have and the manner in which you express it is very understandable. It's not like, oh, you need this because you're like, no, here's your options. Make the wisest choice. And the Bible tells us that we must always seek wise counsel in making the decisions of our lives. And so, again, my thanks to you. We will be back next week, Wednesday, to talk about retirement and anything else that we need to talk about. It may be that Trump gave us those tariff checks by the end, and we can do something with that money.
That's
Don't hold
right.
your breath.
Right. And let me put this: if you uh, um, join us next week, even if you're not thinking about retirement, even though everybody should start thinking about retirement now.
Right.
If you have some money out there from inheritance, from the sale of a home, from 401k, from another job, and join us so you know what to do with this money and how this money can help you
Right.
how to manage it.
Right. All right. Well, thank you again, and until next time, folks. May your God's greatest and biggest blessings be yours. We'll see you
Amen.
tonight at 8:30 for a candid conversation with Pastor D on TikTok, and a candid conversation with Pastor Devin Miller here on the Clear Faith Christian Ministries channel. All right, folks. Take care. Bye bye.
Bye bye. Thank you.